Astral Resources has released the scoping study for its Mandilla Gold Project in the Goldfields region of Western Australia. The company's Managing Director, Marc Ducler, joins me now. Hi Marc, great to see you.
Thanks for having us on.
So big news today. What are the main points investors need to know from the scoping study?
Well, look, the scoping study represents a massive chunk of effort for us, but I mean, the key things for us is that scoping study demonstrates that the project is financially viable. I mean, we've used a conservative gold price. It's generating a significant amount of cash flow. The internal rate of return is really healthy, and we certainly have a lot of opportunity to continue to improve. And the 3.5 years worth of effort, which has taken us from no ounces at Mandilla to well over 1 million ounces, certainly even in Thea, gives us that opportunity to now continue to grow the project as well.
And the scoping study has used a gold price of $2,750 an ounce, and you expect all-in sustaining costs of just below $1,650 per ounce. How does this compare to other projects of a similar size and scale?
Well, I think we've used a reasonably conservative revenue assumption there at $2,750. I mean, the gold price at the moment is very close to $3,000, and I think it's only spent 30 days below 2,900 in the last 180 days. So, I mean, it's certainly a conservative revenue assumption. Our peers have used 2,750. Some of them have used 2,900. So I think we're certainly in the ballpark there. And the all-in sustaining costs at 1,650 is reasonably competitive given the high cost environment that the operations, certainly in Western Australia, are currently facing. So we're really comfortable with those assumptions and the outputs from the study.
And free cash flow of approximately $740 million over an 11-year mine life. What opportunities could this open up for the company?
What's really important about that free cash flow is with the resource and the high-grade component that comes out, we obviously, the material comes out on the ROM and you're going to prioritise your highest grade first. So it results in a 9-month payback for the $190 million worth of pre-production capital. So when we look at debt financing, that certainly goes a long way to reducing the risk, because you can have your debt paid back and then you've still got 10 years worth of runway to generate returns for your shareholders. And that's what we'll be focusing on is an early repayment of the debt, and then looking at how we really deliver strong value for shareholders going forward, whether that's looking at obviously additional exploration, growing the mine life beyond that, whether there's opportunities to acquire tenure around us, and then obviously returns to shareholders, which is ultimately what a lot of our shareholders would obviously like to see.
So are you quite confident the financial metrics of the project could be improved as you move into the pre-feasibility study phase?
Well, we're certainly confident that we have the capacity to continue to grow the resources, and given the recent drill results that we've had at Feysville, and remembering Feysville is only 50 kilometres from Mandilla, so we're going to build a big process plant at Mandilla. We've had some fantastic results just recently at Feysville, and that provides the opportunity for us to bring some high-grade material from there into Mandilla. So what we'll do is, acknowledging that it's the cost environment is going to be challenging, and potentially as you go from scoping study through to pre-feasibility and DFS, it would be naive to think that you're not going to see, as you resolve those costs, some increases. So we won't be naive to that fact, but we will drive really hard at putting more ounces into the project to continue driving the value. And we've already identified some real opportunities for how we can manage those capital costs in terms of optimizing the process flow sheet. So we're giving quite a lot of thought as to how we can guarantee more value for the shareholders as we go towards pre-feasibility.
Marc Ducler, Managing Director of Astral Resources, thanks so much for joining us today.
Cheers, thanks very much.